Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and their professional teams struggle with clarifying great capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way to exit your highly appreciated assets tax deferred so you can create, preserve, and grow your wealth. I'm your co-host, Pearson York, filling in for Brett Swarts. In each episode, I'm joined by some of the best wealth, business, real estate, and leadership individuals in the world to share ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. As always, we are streaming on expertcresecrets.com, Capital Gains Tax Solutions YouTube channel, the Kingdom Luxury Realty YouTube channel, and the Kingdom Luxury Realty Facebook channel. And I'm super excited about our next guest. He's been in M&A for a long time now, and he actually has a podcast, the M&A, M&A Science, and Kison Patel. How you doing?
I'm doing well, Pierce. Nice to chat with you.
Yeah, absolutely. So, tell me a little bit about how you got into M&A.
That's a good question. It started a very non-traditional path. I failed out of undergrad. I literally failed. They sent me a letter saying we're kicking you out of school for academic deficiency, and from there, it's just where do you go? So I remember working for an uncle that owned a bunch of fast food restaurants, and I thought I'd get a break. I'd go manage a store. Nope, he had me start from the very bottom. He had me just come wash dishes every day. And I just remember that he gave me a hard time, and I didn't like it. I was trying to find a job. It was a tough job market, and at some point, I just learned to get a good work ethic from that experience. But I took it. I got into real estate. That was my ambition goal to say, hey, I didn't quite make it through undergrad, but let me overcome this, and I can find my path to success in real estate. And found out I was terrible at selling houses. Wasn't my type of sale. I can't connect with buyers on the sort of emotional aspects or the criteria of making a home purchase. And I ended up joining a little boutique startup M&A advisory practice that a couple guys were getting off the ground, and that's where I got my feet wet in actually working on selling businesses. Started from little stuff, worked with them for a year, quit, started my own practice. Wanted to focus on different assets. Started doing hospitality or hotels, and started with little privates. Ended up working with Kimpton, Extended Stay America, was a series of developers,
Yeah.
and then moved over into financial institutions, working with small financial institutions like community banks, helping them raise capital, buy, sell, help big banks buy little banks. And then that led up to a recession where this sort of turns into that typical founder story. I was familiar with a lot of the challenges in M&A, and got involved with this startup that didn't pan out the way I wanted it to. It
Yeah.
failed pretty hard because it was kind of betting against Google's algorithm, in short. And what I was really intrigued from that experience, because I got an opportunity to work with software engineers, was the way that they would use project management tools to manage their workflow in building software. And I thought it was such a big value add working with that team, starting off Excel and transitioning to this project management tool. I kept identifying with my past experience in M&A and thought, why not project management for M&A? So in 2012, started the company Deal Room as a project management tool for M&A. And probably every founder mistake for the business, deal making guy to go start a tech company, I did in the first 5 years. I mean, it was struggling to get the right engineering team, getting them productive, getting your product market fit, then your go to market. So the first 5 years were brutally hard, especially in an industry that's very conservative, slow moving. But then things really shifted. We started getting a good model together, a good value proposition. And today we focus on working with larger corporations that are typically a billion plus market cap that do three or more acquisitions a year, and we help them optimize the whole life cycle of doing an acquisition, from the sourcing to doing all the diligence. We get more people involved and a lot of sensitive information that gets exchanged, to actually the integration, where you got even more people involved, more complexity, and everything's on the line, because either you integrate the company well and create a lot of value, or you screw it up and destroy a lot of value. So that's where we're really trying to put our capabilities to enable these companies to better do that, so they end up with better results and happy shareholders.
Yeah, absolutely. So, started from the bottom, and now we here, right? Like it's just,
American
Keep
dream.
going. Well, um, so what's interesting is how you took something that you learned from another industry and you applied it across, right? And that's what you're kind of using as your foundation, as your competitive advantage. It sounds like is your ability to you know cross over the conceptual lines and implement.
I can't speak nothing or advocate more than borrowing ideas from other industries. In fact, we still do it. Anybody wants everybody, all the buzz has been around AI, but if you really want to see, especially if you're in an industry that's so far behind, all I got to do is look over any of our software, our sales and marketing tools, and I get all kinds of ideas from them on
Yeah.
what we can bring over to our industry.
So what I believe everyone has a certain set of gifts, strengths, spiritual gifts, whatever you want to call them. What are one or two strengths that you have that have led you to be successful?
It's the strength of I always look at the principles, right? My three principles I drive by is discipline, continuous learning, and empathy. I'm working on empathy,
Yeah.
but discipline is probably the greatest strength. It's just that ability to get comfortable doing the things you're uncomfortable doing.
Yeah, and that kind of goes and speaks volume to your podcast that you've kind of set up, which is M&A Science Podcast, which you said, before the show you've been doing for almost 6 years now. So, and it's just the consistent discipline of doing it every day and working on it and making sure that you're sticking with it. Yeah.
That's true. I didn't like it. I was a very shy, introverted person. I didn't like public speaking, any of that stuff. And I took it as a challenge. I knew where I wanted to go and said, "Hey, this is part of it. Just do it," and push myself.
Yeah, absolutely. So you guys can go check out that podcast, M&A Science Podcast. And where can they find that?
If you literally search M ampersand A on most podcast app, you'll find it. It's called M&A Science.
Okay. On all the major iTunes, Spotify's.
Yep. Anybody interested in learning corporate M&A or have trouble getting to sleep at night, you should definitely check it out.
You can check out your M&A. All right, cool. So that leads me down to this question. So this is a capital gains tax solutions podcast. I told you I was gonna ask you this, but so if you're gonna sell a business, right? Um, what are some of the tax strategies you guys use to help them not have to pay the capital gains tax?
So if you're thinking capital gains, you're thinking more like a private company. If you're, and this is most transactions, right? Most transactions, at the end of the day, could be a founder started the business and they've gotten to that point. It's time to sell it. It still could be family owned, and even a mid-sized business where the second, third generation has it, and it's still privately owned. The corporate side's a little bit different, but even in that situation, you sold it to a bigger company. You got this big challenge of capital gains. So that's some of the stuff I'm learning. The fundamentals I know is like the obvious is you're going to have some taxes due. Uh, Things that you don't think about is like what's your local state obligations, because it may be worth for you to relocate if it's going to be that big of an exit. You may be surprised in how much of a difference that would make. And I've seen that. I've seen founders that literally relocate to Texas or otherwise no state income. And
Yeah.
that then I guess you got your other means too when it comes to private company. And so like you have the right size and threshold to do some of these vehicles, but setting up those trusts that certain states are a little friendlier about, being able to manage your funds there. But I disclaim all this with just this is stuff I hear. I'm not a professional tax advisor on this stuff. I think
Yeah.
there's some cool vehicles, Pierce, that you're a lot more familiar with regarding it. But I think given that it's the circumstance of an exit, which is really unique of its own. It's not you kind of got a high paying job and you just want to manage that on an annual basis. This is a one time deal,
Yeah.
and, whether it's a 7-figure, 8-figure, 9-figure, 10-figure, exit, I mean, that nature of it is how do you handle it? Because people, you wanna sort of retain the value you created, and then I think there's objectives to it too, because a lot of people aren't just gonna get buried with all that cash. So understanding, like, what are some of your long-term goals, is a portion of that geared towards social causes. 'Cause then you can start thinking of that, and that's like a cleaner transaction if you can put that into a foundation earlier and not knowing that that's
Yeah.
sort of here's your goal. If you've done your, your family succession planning there, you're like, "Hey, this is what I wanna do is give back to causes and things like that." Um, then, yeah, then you can plan that earlier and like I said, make it a lot cleaner, easier. Um, so those are just some of the general things that are like pretty one-on-one common stuff that come up from folks that I talk to that go through exits. I had a small one, and even then, it was just more of working through the accountant because it's a lot of people's portfolios is checks and balances, so it's very unique to each person. Um, but yeah, I'd be curious to hear what have you seen, if you've seen anything unique for those scenarios. Curious.
Yeah, so one of the cool things that we do over here at Capital Gains Tax Solutions is we leverage a strategy called the Deferred Sales Trust. It's not to be confused with a Delaware statutory trust, but it essentially allows you to exit any highly appreciated asset, including um, a business or a stock or highly appreciated primary real estate or commercial real estate, and defer the tax and put it into an investment business trust, essentially, that you can basically kind of use to fund some other investment projects. For example, we had a gentleman who sold a $2.5 million business, and his basis was zero, and he deferred, I don't know, $600,000 in tax or so, and he put that into a community development project in Tennessee where they're building 72 multifamily units. So you can defer the tax and you can invest it in other places and all that kind of stuff. And what's interesting, and so we talked a little bit about the carryover, right? So I use it down here in Newport Beach. So I'm located in Newport Beach, right? And what's really unique about the Newport Beach area is that there is so many homes that are primary homes that have just shot up in so much value over the past few years. Uh, it's just such a highly appreciated market, and California is so, tax burden heavy state that, these people, like, for example, we had there's a gentleman that bought two houses on the beach in the 90s, and his basis was like 1.2 million bucks. He's trying to sell them for $11 million. That's like a $4 million capital gains tax after you account for the depreciation and all that kind of stuff. Like, so four of the $10 million you're going to make is going to the government. So, as one of these, like, real estate agents down here who has this competitive advantage, like, look, Mr. Seller, like, you can literally save $4 million listing your property with me, right? Like, even if I sell it for, million bucks less, 2 million bucks less, you're still going to net an extra $1.5 million coming with me, like, on the back end, like, because it's not about what you make, it's about what you keep. So, in your world, right, in M&A, 1031s don't really exist. You can't really 1031 a business, right?
Yep.
And so what do? If you have some sort of value add where you're like, hey, look, like, on top of that, like, I can save you, 30% on your taxes, and you don't have to move to Nevada. You can if you want to, but you don't have to, right? Like, might still be a good play if you're moving out of California, but that's a huge competitive advantage. So talking about that cross industry type of, conceptual move could be really interesting for you.
Yeah. No, those are always interesting. Like I said, I think that's kind of why it's so important. You got to work with some tax advisor when you're going through that early, like a
Early is the
year
key.
early.
Yeah, early is definitely the key. So tell me a little bit about when you're in there, right? And a client comes to you and they're like, hey, I want to sell his business. Walk me through the process. How's it work?
If we do a lot of corporate work. So if it's a
Yeah.
corporate work, a lot of times they're doing a whole carve out process, which is a pretty complex thing of its own. But let's just back out of that and do a pretty classic example of a typical private company sale.
Okay.
So when you go through that, that first thing is strategy, like really thinking of why are you, people don't, they just think I'm selling this business, I'm going to get a big check out of it. And they end up with a lot of regrets and we'll go
Yeah.
through that. Because there is drivers for it. It is, are you just done? Maybe you're a serial entrepreneur. You want a new shiny thing that happens. That's fine. Um, but it's important to know because it's how's this transition of the business going to look like? Because if you're not going to be there, how's it going to work? Is there leadership? Do you need to sort of think about that in terms of who's going to buy the business? So there's those things to start getting a sense of like what your goals are. I think your team members, like how attached to you are with your team, where do you want to see them when things are said and done in terms of, hey, this is going to continue to be a growing business and stay on track with its mission, or maybe it belongs in a larger company, and that could be the exciting opportunity to even achieve. And that happens sometimes. Like for you to achieve your mission and hit the scale, it may make sense to get into like a company like Google where they already got this massive distribution. So that's like why it's important to start thinking about that early. Then it kind of shapes, it gives you more, the more time you get, the more consideration you can put on things, especially that direction, because some of it you could play through the long game where you want to really target certain companies and build relationships with them. Maybe you had that conversation with their corporate development department, talk to them about partnerships, things of that sort, the private equity firms that are out there in the space. Regardless, there's nothing wrong with making friends with the bankers. The
Yeah.
bankers, at the very least, can give you an estimate what your business is worth, give you a lot of data, give you a lot of data for comps and just of what companies are selling for. And then if you want to run an auction process, you can work with investment bank. And it depends on the situation. If you really know it's a lot of potential buyers for it, it could be definitely worthwhile to have a bank run that process and pay the fees, and you just end up with like here's 4 or 5 different buyers for you to pick from.
Yeah.
And
And
but there's some drawbacks of it too because you're kind of doing it so fast versus if you got it's like dating, right? If you kind of like did one night of speed dating and you got married to that person, versus the typical, hey, let's date for 6 months and then make sure we're really serious and set on things. You kind of get a difference between working on a proprietary process with just one buyer, with mutual interest versus running a full auction process. That's why that strategy piece is important. We've seen it happen where somebody sells it through an auction process, and then later on they see what the company does, when they integrate the
man.
company, and things just go wrong. I mean, maybe the totally different strategy, and next thing you know, that founder, while he's got that big check in his hand, turns around and just see his baby burning and sinking, and
Uh,
it just feels terrible, a lot of remorse, and you don't want to be in that situation.
yeah.
So I always tell the founders to the number one thing is just ask questions. You got somebody you're selling a business, just flood it. What do you have you done this before? What companies have you bought? How'd that work out? What happened to that CEO? Can I go talk to him? Just keep peppering with questions. I understand like what are you going to do with this company? What's your strategy? How are you going to create value? I think I would even expand that saying just when you think about taking your business to market, we always get this perception of value, but that doesn't mean anything. The value is determined by the buyer, which is unique
Right.
to each individual buyer. So start thinking about that. Like, yes, there's the PE firms in town or whatnot, but what's the value going to be to that? Is it something they're buying as their first time business, or are they tacking on to one of their other businesses they already own? That large corporation, is there like a really good strategy for them to leverage your technology and make, $100 million business line out of it? Because they're going to have a different value for that opportunity. So really understanding what that perception of value looks like from the potential cohorts of buyers out there. Um, that's like the real key thing to think through. But
Yeah.
I don't
So
know.
really, really diving in, understanding your why, right? As a business owner who's trying to liquidate, understanding that, things are going to change once you leave and you have to be okay with what happens. And then making sure that you're kind of setting yourself up and your team up, right? And whoever you're leaving behind with success. So it sounds like that. So let me ask you this. So someone once told me that you should always build businesses like you're going to sell them. What do you think about that?
There's some good to that. It really depends. I wouldn't argue there's one absolute right or wrong. The thing when you do sell a business, most companies have a lot of work to do. There's so much preparation to actually sell your company. You have to go back, clean up your financials, especially if it's a private company and you got your little side vacations or random stuff, some of the gadgets or Peloton on there or something, like that's some stuff to really clean up. Then you got operational cleanup. There's just you have like somebody comes in and does diligence, and what happens, especially if you're selling to a larger strategic, every department leadership, and you have them in your company, they're going to be doing a full on diligence to really understand what they're buying. Does this represent the value that they're paying for? What's the risk involved? And there's a lot of assumptions about what they're going to do with their company. They're trying to validate that those things are actually going to come together. They also want to start planning on how they're going to combine these companies, if that's the plan. So that's just it's a taxing process.
Yeah.
And the thing is just like your house. If they come in and they see some mold residue on the ceiling and like peeled up carpet, they're going to get super suspicious, and that's not that's going to turn them off. Versus if everything's like immaculately clean and staged, then they're going to have a higher level of confidence and certainty, and that's what you ultimately want.
Yeah, definitely. So I'm sure that you've seen this whole Twitter Elon Musk thing, right?
Yeah, entertaining.
So I was seeing I don't know, meme or something, right? They're like, okay, like Elon is just trying to expose Twitter for fraud, and the whole thing was fake, hearsay, whatever. I don't know. But how much truth is there to a statement like that? Like when you go in and make an offer, right? Because we were just talking about you got to clean up a bunch of stuff, right? Make sure your operations are good to go. So like, what are your thoughts on that type of situation?
Well, this is a good example of doing diligence. Like, hey, here's this deal. It looks good. And then as you go through your diligence, you're identifying your risks. And part of that risk is like, hey, if I buy this company and they're saying, 95% are actual live real users, and they're wrong about that, even if it was small, even if it was, like a 5% difference, what's 5% of, I don't know what the last offer is, 38 billion. Like it's a ton of money. It's a
Yeah.
ton. And then that's such a big significant metric at the end of the day for those transactions that it is pretty material. I do like how the framing is very specific on just a key item. Sometimes they get caught up in like the little trivial stuff. Is That's when it gets a little annoying when there's little companies selling a big company and they're digging into all these little things where you literally got hundreds and hundreds of questions about your business. But he's got something pretty big and understandable that, yeah, like give me certainty that these are actual real users. Like validate them, prove it.
Interesting. So there's some validity to that. And my initial thought was be like, okay, look, like if Twitter's gonna accept like a $43 billion offer, right? Like, wouldn't it already be like cleaned up? Like, wouldn't they just be like full bore, like cleaning that, and making sure that like, and because if there was fraud, like
If they're
why even
now
accept it?
the company, because they're public, that's the funny part is like do as in you don't do the same process you do as a private company. There's definitely different filings and so forth, being a public company, but it's sort of public. The things are kind of set up for you to just take the risk, whereas a private, you negotiate a lot of it.
Yeah.
But the thing's already public, so
But he
that's
wants to go back. He wants to go back and make it private.
right, right, which is fine. But so the terms in some ways are actually simpler because everything's already in the public. Like everything, you don't need to even ask for financials. It's all public. I mean,
Yeah.
it's so you have a lot, and it's just the way the entity is. It's public. I mean, it's already everything's there, and the risk you're taking is just all disclosed. You know what you're getting. It's there. Um, I think it's just it goes back to that thing where it's just here's a real material item. It's not so much of if it's hidden or not being disclosed. It's validating it, which that's what the buyer's requesting. Here's my diligence request is show me this is real.
Yeah.
I might get what if I'm doing a deal and the person something's up with the customer contracts, like all the signatures look the same or something, right? Something's like really odd. That's a big freaking thing. I mean, I've seen through deals where sold for $60 million and is a non-existent total paper company.
Whoa.
And yeah, I'm not gonna drop, but like one of the big four got sued for that. They did the audit and completely didn't pick up that this was not an existing company. Um, so yeah, there's some big scams like that. So yeah, I mean, you should be doing actual diligence and making sure there's no funny business. There's no like Enron bubbling up around this company or anything like that. But so I think with the user base, like absolutely, like what? Okay, so validate it. That's the seller's job. You know, the buyer. You want to give buyer. That's what he wants is comfortability to close. That's
Yeah.
when diligence ends. As soon as you're really, really comfortable, you checked in with your team, and everybody's like, "Yeah, you know, this is the risk I found. We got mitigation plans around it. We've already discussed it. We're good. We can close."
Wow. Interesting. It's
So
interesting.
I think it's valid. I don't think it's like just for PR sake.
Yeah. Interesting. So do you think it'll go through?
Usually M&A deals when they get this far, they tend to go through. You know, there's like a well above an 80+% chance it'll get done.
Wow. That's interesting.
Yeah, and some of this, like, you know, if you go back to the Verizon Yahoo deal, that was an interesting one because they had a material breach during their deal.
Yeah.
And it was really interesting in how I mean, they hired all these consultants to go in and do their analysis, trying to estimate the damage, and there's no way to, right? There really, at the end of the day, is just forget how much you pay like, there isn't a way to do that. And, you know, it just came down to, like, we don't wanna sell less than what AOL sold for because Yahoo's so if you look at the price, it sold for 1/10 more of what AOL sold for.
So there's still a lot of room for negotiations down here with all this stuff, right?
Yeah, you can now you say, "Hey, here's" 'cause when you have a material finding like that, you can that's leverage to saying, I gotta, you know, change my deal terms here."
Interesting. Okay. Well,
Yeah,
cool.
and nobody likes that. Nobody wants
No,
to get their stuff. Yeah,
no, you want the deal to close, but you know what? Like, if you're gonna not have what you say you're gonna have, I mean, I don't. It's not the same deal, right?
yeah, I totally agree. I mean, you're retrading, that's the word I was trying to think of.
Yeah, retain.
That when you're, yeah, because then that's what you're doing. The people don't like it, but if you got a good reason to, that's what happens. You know, if I go back and say, "Hey, we got a quality of earnings report that showed, you know, you sort of misallocated some revenue for this year, and it totally changes our model." You know, like we honestly got to adjust our valuation for your business. And I'll explain to you. I'll walk you through it and show it to you. But this is literally a finding that we had that makes a material impact on how we value your company.
Yeah. No, absolutely. Awesome. Cool. So, what are you most curious about right now?
What am I most curious about? Um, right now I've been focused on building out the sales function in our company. So I've been doing a lot of stuff around sales.
Yeah.
I'm learning a lot and just interviewing a lot of sellers. I like there's a lot of psychology component to it. So I've been really interested. At some point, I got to pass it off and let somebody else take reign and can run that function and
Yeah.
actually do a better job than I'm doing. But it's just been fun. I don't know. I think that's the fun part about doing this job is you learn everything. You learn all the pieces of the business. You can get involved and never stop learning new things. But right now, it's all been sales. It got me curious.
Awesome. Okay. Cool. And how do you think that the coming economic situations are going to affect M&A?
Money gets more expensive. Money's more expensive than your way you value deals may be vastly different. I think it's you know at the end of the day, deals are going to still happen. That's
Of course.
people on the down cycle. It's just different types of deal that happen. I think it's nice that things have been very PE favored, just because of the cost of capital, and if things swing back over to the large strategics, I think that'd be a good thing.
Awesome. Well, cool. All right, we're kind of coming up to this 30-minute mark here, so I know I got to get you out of here. But do you have any like final thoughts or anything like that?
Final thoughts on you know, I just think about deals, and it's always like that when you think of sales, the psychology, empathy.
Yeah.
If you can just connect and really listen to people and just put that It's hard to, because you go to meetings and you have objectives or what you're trying to talk about, what you're trying to get out of it, and you always have the formal small talk that you always do, but if you can really put all that to the side and try to understand how that person, like, what are they thinking? How do they feel? Why do they feel that way? Like, really get inside that person to understand them. I don't know, it just when you do that, you'll start understanding what their goals are, what their challenges are. I it's just been the best thing. Then you can get something done. You can align yourself to help them achieve those things, and that's what success is created around.
Yeah.
So I think in M&A is the same thing. Like, we forget about that because we keep looking at Excel sheets all day.
Yeah.
But it's like, if you spend the time to understand what makes people tick, what drives them, you actually that get all the leverage you need to get deals done. Like, when you really understand what that person, yeah, and it's just something different. It's really different when you spend time to really understand what they're doing, what they're thinking, what their goals are, what their challenges are. You just connect with people in a very different way that just gives you leverage that no financial model forecast will ever.
Yeah. No, that makes a lot of sense. Listening is a huge it's a superpower for some people. Those who can do it well and understand people, he got a huge advantage for sure.
It's got to be savagely curious.
Yeah, definitely. So, okay. Well, Kisan, it was a pleasure to interview you today. And where can people find you?
I'm on LinkedIn.
LinkedIn. Okay.
Kison, Kison Patel.
Yep. And go check out his podcast, M&A Science Podcast, on any of the major interweb podcasting places. What do you call those things?
Podcast.
No, like the
Streams.
platforms. Platform.
Oh, podcast stream. I don't know. Streaming app.
Yeah. Any of your iTunes or Spotify's or wherever you listen to your podcasts, Google Play Store or whatever it is for the Android user. Go out there and yeah, definitely check out the podcast. And if you guys are interested in learning more about the Deferred Sales Trust, you can come to our mastermind every Friday at 10 a.m. Pacific, 1 p.m. Eastern. And you can sign up for that at capitalgainstaxsolutions.com. Kisa and I already invited you, so hopefully you'll be there. That's a weekly thing. So if you can't make this one, no worries. You got the next one. But every Friday, 10 a.m. Pacific, 1 p.m. Eastern, you can find out a bunch of information on our YouTube channel. Please rate, review, and subscribe to the podcast and all the fun stuff that we got going on. Check out our YouTube channel. There's a ton of information on there, a ton of information on the website. So it's all good things. Kison, any parting words?
I think we covered a lot. Yeah. Cheers to the deal.
Yeah. Yeah, absolutely. Awesome. So thanks again, everyone, for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way to exit your highly appreciated assets tax deferred so you can create, preserve, and grow your wealth. Please rate, review, subscribe. Thanks again for listening, everybody, and we'll see you on the next one. Kison, thanks again for your time. Really appreciated it. Got a ton of value out of it, and we'll see you on the next one.